Center Information Services. So with that, I'm going to turn it over to Jen Arbori, and we have one polling question to start with. So those of you that are the CPAs in the audience and want to get CPE, 3 hours of CPE, please answer the following question. Who do you think will win the February 2022 NFL Super Bowl? The Buffalo Bills, the New York Giants, the New York Jets. Those are all the three New York teams, obviously. Tom Brady and the Buccaneers, some other team, or no answer. So please answer that question, and we will allow Jennifer to start her presentation.
Make sure. Also, if you have questions in the chat, please make sure you direct it to all panelists. That way we can all see the questions. Thank you.
Perfect. Well, thank you. Good morning, or almost good afternoon at this point. I'm Jen Arbori, and just a little bit about my background. I spent about 20 plus years or so on the nonprofit auditing side, and just a couple of years ago, really shifted my focus into working with nonprofit organizations in more of an outsourced capacity. And we deliver our services using a cloud-based accounting system. So today, I'm going to talk to you about the benefits of a cloud-based accounting system, how it can help to improve your financial reporting capabilities, support your mission, and kind of what we've done with some clients to help them grow, as Jerry indicated earlier, as things have started to change. So let's start by setting the stage by looking at how the nonprofit world has changed. Obviously, there's been a complete increase in the need for and demand for services, probably magnified tenfold even over the course of the last year in specific service areas. With the need for services rising, that funding from public, both state and federal sources, as well as private sources, has become more and more limited. And those funders are then increasing the complexity of the compliance requirements, which I'm sure you've all experienced as well. So organizations have really needed to focus on reporting metrics, changing reporting metrics and data in a way that they have not had to in the past. So as a result of this, more and more nonprofits are actually being forced to look much more closely at their accounting systems and their capabilities, and especially their technology. And let's face it, most organizations find themselves short-staffed. People are wearing more than one hat, and the minute anyone suggests a system change, I don't care what type of system it is, and especially on the accounting side, I swear anytime we suggest accounting system, that panic, right, sets across individuals' faces. Because the thought is it's a lot easier to kind of plug away at the manual processes that are working. They're just consuming really valuable resources and stifling organizations' ability to grow. So in order to really move forward, you need a system that leverages technology to gain efficiencies and then streamline core functions, your AR, your AP, your month-end close processes, even payroll, allowing resources to be freed up and have time to work on strategy and growth that are going to become more and more critical as you move forward. This is where we're seeing the need for nonprofit organizations to get away from traditional outdated software and really look at full-scale integrated cloud-based solutions. So I think we can all relate both professionally and personally to the pains of dated technology. It equals frustration in any capacity. So to that end, you can see here there was a poll done or a study done on technology frustrations by nonprofit leaders. And probably no surprise here to any of you in those seats that the lack of automation and efficiency were issues, the manual processes, delays due to old outdated systems, and I'll tell you a story in a couple minutes on that. And then visibility into the metrics that matter and being able to easily measure outcomes really ramping up. It used to be, whether it was your state or federal funder, that they were looking for financial statements and information. Now the level of detail from a CFR to a cost report to any other sort of grant or funding related reporting, it's just gotten more complex. They're tying their willingness to give you money on your ability to provide metrics that matter and show that the dollars they're giving your organization are providing outcomes and measurable outcomes. So let me shift gears for just a second here and talk a little bit about the cloud and why it works so well for nonprofit organizations. The first one talks about, it says you pay for what you use, but really what that comes down to is, complex IT infrastructure. Many organizations, either have, one person who's working in IT and maybe their resources are somewhat limited, as well as having a server, having the space for the accounting software to be loaded and worrying about updates and upgrades. Not the case when you're working in the cloud. The second one, and as Jerry indicated, Carl will scare you up plenty later, but one of the things I've been asked is, what about the safety and security of our data? We're putting a lot up in the cloud. Is it okay for all of our financial information to be there? And one of the things when you're working with a reputable vendor of a cloud computing software is that they have skilled cybersecurity engineers that literally their job is to watch over the data and where that data is stored. Number 3 should probably have 3 stars and an asterisk next to it, as it's become such a prevalent item, especially in the course of the last year, but supporting a mobile workforce. I think this was already becoming, flexibility in workforces and ability in workforces, but one of the things that this allows is that whole anytime, anywhere functionality, even to a degree different than a VPN might in many of your organizations now. The fourth one, I alluded to this earlier about outdated software, outdated versions. But one of the issues with a non-cloud-based solution is that you need to run updates. And we were actually working with an organization that we were talking about bringing on board to work kind of in a cloud capacity with some outsourced services. And they have a fairly decent software now. And I was like, well, you already have the capability of doing this dynamic allocation or functionality. And she's like, no, we don't. So we looked at their version. They were actually 8 versions behind the most recent software version that was out there for the software they were utilizing. And so they had missed out on some great updates. It doesn't happen in the cloud. It's automatic. Those updates are automatically there. You don't even realize they're happening. And she said they weren't doing them because every time one came out, they had to get the IT guy to go and install it on the server and run those things. And so it, again, kind of bogs down the process when you're talking about more manual versus in the cloud. And then the last one listed here really being the potential for integration. And I'll talk a lot more about this a little bit later, but ways to use the data in the cloud and then take data from other parts of your organization that are non-financial and integrate that together to create meaningful dashboards and outcomes and measurements that your organization can use from a reporting capacity. One of the unique complexities of a nonprofit, it's probably not news to many of you, that financial reporting isn't one note. There are so many unique and different stakeholders and users of the financial information. It starts with staff. You may have a program manager that just needs to look at their budget. You have federal and state funding sources that clearly want very specific reports. You may have donors or grantors, and then even board members. We find that even from a board perspective, you have finance committees that want more detail, and you have boards that want maybe a little less detail. But each of these stakeholders needs something a little different. And most organizations have manual processes to produce these different types of reporting by downloading detailed and complex general ledgers in order to get those reports out to one or more. So you're bogging down the accounting personnel with so many different types of reports that really, in a well-established system, you should be able to do at the push of a button, or set up dashboards to be able to be utilized on a more routine basis. Additionally, with a cloud-based system, the access and visibility can really be given to just about anyone. The ability for your program managers to go in and look at data and not be poking your accounting personnel for reports on a monthly basis. I had a CEO call last week. She was sitting on the soccer field and she was like, this is just so great. She was actually in her cloud-based system asking some questions. So again, accessibility and visibility are critical. I know I mentioned this earlier, but it's kind of worthy of its own slide, a little bit of an expansion on the manual processes. One of the biggest issues that we find, and I used to see on the auditing side, is, it can take a nonprofit 4 to 6 months post year end accurate reporting. And that's just unacceptable these days. You don't have the ability to kind of kick the can until the 6 people who need to be involved in the manual spreadsheets to accumulate the data that you need for a particular purpose gets completed. It needs to be real time, and it needs to be by role or by program or by location and by funding source. And you really need that at the push of a button. So, I always heard, people talk more about, for-profits really need the fancy financial reporting. Well, so do nonprofits. It's just as important and probably even more important because of the layers and the levels of reporting that are involved. And you can see here, there are actually the 6 benefits of automation. Again, really no surprise as far as tracking outcomes, financial management and reporting, month-end close considerations. All of these things ultimately result in improved efficiency and effectiveness of your organization. So I'm going to shift gears for just a second and talk about a specific cloud-based software, Sage Intacct for nonprofits. When I initially made the transition over to outsourced accounting, I was introduced to this solution and it immediately blew me away by its capabilities. And I've been continued to be impressed with the level of resources that they put into nonprofit organizations. And I'm just going to put it out there right now. We don't actually sell the software. We have chosen this ourselves as a firm to deliver our services. So I'm not here pitching you should use Sage Intacct. What I'm doing is explaining to you this is the cloud-based solution that we actually chose to work with our clients and deliver services from an outsourced capacity. And I'll talk a little bit more about what that means in a little bit. And we chose it because of the impact that we saw in the demos, and then now at this point, what we've seen and the movement and the ability to watch our clients kind of grow with the software and what it's done for them has just been outstanding. It's a solution that fits all types of nonprofits as well. So, you might be a smaller $500,000 nonprofit that is just kind of starting out and growing, it fits. You might be a massive 10 entity consolidating nonprofit, and it works as well. It works by type or sector, from simple to complex. So that's one of the other reasons why we kind of went down this path was, and it's also the AICPA's preferred provider of cloud financial applications, especially on the nonprofit side, but it can streamline grant, fund, project, donor accounting while delivering that real-time visibility into the metrics that certainly matter. So just a little summary here on, obviously why we love this particular solution and really cloud computing in general. I mean, it fits all the buckets I talked earlier about, so I won't go through each of these. In fact, I'll jump on because there's a couple of features that I really want to spend a little bit more time talking about. And whoop, looks like we have a polling question.
Can you read it?
Yep. Do you believe that your organization might consider outsourcing non-core competencies, information technology, accounting, HR, etc., now or in the future? A, yes, B, no, C, will never happen at our organization, or D, I do not have a clue. I think this is one, even if you're not CPE, we really would welcome your candor just to see where the nonprofit sector is going in terms of outsourcing.
And for those of you that may have joined us late and missed the first polling question, not to worry if you're a CPA. If you're now on and you answer this question and the remaining ones, please don't worry. We'll not hold you accountable for polling question number 1. We now have over 200 people that are on, but we've got about 40 that have come on since the first polling question. Jen, we'll turn it back to you.
Thanks. Okay. So the first piece that I want to kind of elaborate a little bit more on, it talks about the modern accounting team. So it's really the utilization of a technology that has changed the modern accounting team. We find that as systems are being implemented and those that really realize its capabilities, that there is the ability to combine job functions, or job functions can be shifted, allowing existing resources to be used in a much needed capacity. One of the concerns we hear sometimes is the minute that an organization or someone in a role hears the word outsourcing, right? It's like, what are you outsourcing? Does that mean I lose my job? Does this person lose their job? Who's going to lose their job? It doesn't necessarily mean that if you're outsourcing your accounting, or we're talking about a modern accounting team, there's so many various hybrid ways to utilize it, especially a cloud-based solution. There's flexibility and structure to build the best accounting team that could literally result in a part of the team being internal, working with a part of the team being out, or the whole team even being external, but also a hybrid of resources. And I'll talk about a couple of examples in a little bit. But the other thing that I like to point out here relative to the modern accounting team is not everyone has to be under the same roof all the time. And it doesn't necessarily mean from an outsourced or an internal actual staffing. It also gives you, I like to point out here that utilizing a cloud-based solution gives you flexibility too in hiring. You know, I've had some clients where they're like, there just isn't a good quality candidate here, you know, in my particular location. And I'm like, well, they need to live in the same city as your organization resides. If you can get a great resource and they happen to be in a different city, that's one of the things that a cloud-based system also gives you the flexibility to do, is have individuals that work in different places. And I think we're all well aware that the really talented accounting, you know, pool seems to be shrinking somewhat, and it's been harder and harder to fill those positions. So again, that's one of the other benefits from a cloud computing perspective. And I know I've talked at length already about, you know, financial visibility and kind of getting into the system. Well, one of the key aspects to a really good cloud-based solution, and the reason that we chose Sage Intacct to deliver our services, was that this solution has a multi-dimensional chart of accounts. And you know, you'll hear softwares say, oh, well, a lot of different softwares have different, you know, dimensions, or they have, you can go ahead and set up 3 different ways to look at this account. Sage Intacct actually gives us 10, and that's the game changer here, because you end up with the freedom and the flexibility to dissect your data, to eliminate hours upon hours of Excel spreadsheets, and as you're inputting the information, identify it across a multitude of dimensions. And that dimension might be location, it might be fund, it could be by grant, it could be by program level. And by doing that right off the bat, that's where your reporting is then going to become that push of the button, turnkey report, instead of what I've experienced in most of my career at nonprofit organizations is that there's this giant download of general ledger information. We're putting into multiple Excel spreadsheets. We're then dissecting it from there or building it back together from there. This is where the solution allows for that reporting to be, you know, really turnkey or push button and give you that real-time insight into what's going on. And just to elaborate, I know I talked a little bit earlier about third-party integrations. It was number 5 when we were talking about the reasons for cloud-based solutions, but it really is a game changer when you can utilize your cloud-based solution. So using that cloud-based financial software and linking it with other business integration applications that are integrated. So if you've got an open API that allows for cloud integration, so for you to take program information, you now have this other application that you've invested so much time and energy in on the program side, you can take that data, pull that data into a system, a cloud-based financial system, and then use that information to create dashboards. So not only are you looking at financial information and being able to provide your standard financial statements, you can now integrate that with program-related data on outcomes. You know, number of individuals served, or how much did it cost you per client to deliver that particular service. So it really starts to change the metrics and the ability and the visibility into those outcomes. The other one I do love to tout is even an open API when you go back to the financial level, linking with your payroll provider. You know, some people say, well, we already have, they can download and upload. This isn't even download, upload. This is like, it just happens. Your payroll closes, and some of the large payroll providers, literally the information goes right from their system into the system. I have clients who said, oh yeah, well, our payroll person spends a day on the 1,000-line journal entry. No longer has to happen when those items can be integrated. So from a time perspective, I have 3 examples here, but I'm going to focus just kind of on one main success story that I just want to talk to you a little bit about from kind of a scenario of, well, what does this all mean? You know, you've got cloud computing, you're talking a little bit about outsourced accounting and how does this work? So I'm actually going to use that veterans organization because it kind of hits a lot of different notes. They have federal funding, they have state funding, they have Medicaid billing, they do fundraising, they have special events, and they actually own a store as well. And they had started to see turnover in in the CFO. They had it happen 2 times within a year or two. And part of it was because the size and the funding, they really weren't able to, they didn't have the resources for a true CFO position that they really needed. But they had a great resource in the controller, and they had somebody else working kind of as a senior accountant position who was also excellent. But they were using QuickBooks, and that was probably problem number one, was given all the multitude of things that were going on within their organization. Every time they took on a new initiative, they just added to their chart of accounts and added to their chart of accounts and could never really run reporting. The CEO and the board got really concerned about the number. They felt like the data lacked integrity. And so we were brought in to kind of have a conversation with them. They were super interested immediately in a cloud-based solution just from an access perspective, because the CEO was saying, oh, I can't even get in the system to see information. So we worked with them to implement Intact. The controller was an integral part of that, as well as the senior accountant who stayed on staff. We integrated their POS system from the store. So when I talk about those open APIs, they were using this POS system called Lightspeed. We were able to take the data from Lightspeed. So on a daily basis, that store is downstairs. Their people are in with transactions. Those flow immediately into Intact. We had set up the bank feed. So all the banking activity rolls directly into the system, as well as payroll. And then, as far as what's the outsourced piece of that, they realized they didn't need a full-time CFO. They needed, someone to spend a few hours a week to provide higher level overview. And that happened because that controller ended up out of the weeds. That controller was able to get out of so much of the day-to-day because it became automated, that the controller was working more with the CEO on projects and things that needed to be done. And they really just needed someone to kind of come in and spend a few hours a week working with the CEO on occasion and working with the board as well. And being able to provide reporting by funding source and utilizing and automating the system. So, we have freed up that controller's time working on those projects. And so I think one of the biggest misconceptions that I want to make sure everyone understands is, for an outsourced accounting capacity, it doesn't mean a replacement of an entire department. Sometimes it is the supplementation of 1 or 2 staff. In some instances, it really does mean, that we do come in and take over, but in most cases, that's pretty smaller scale organizations where, again, bringing us in really does mean kind of replacing maybe a bookkeeper or somebody who's retiring. That's something we've been brought in several times now on. So it's really supplementing what you're doing from an accounting standpoint and bringing in a software solution that's really intended to be longer term. And that really kind of leads into, for those of you who might be intrigued by the Sage Intact or even cloud-based financial solutions, and you're thinking, well, I don't have the staff to execute this. That's again where we come in. We work to customize a solution that addresses the utilization of the system with your staff, our staff, or a hybrid of staffing intended to be really a long-term solution. This isn't a we come in, we spend 3-4 months and we get out. We come in and we continue to make sure that you're utilizing the system and we're taking some of that accounting burden out of the staffing that you currently have. And it allows for the modernization of the accounting and reporting. We can be on the slide, you can see there's a couple levels we talk about. We can be a bookkeeper, we can be a controller, we can be a CFO, we can work in one or all of those positions alongside existing team members to really take your organization to the next level. We keep talking about the modernization, and honestly, nothing excites me more than assisting an organization and watching how transformational the utilization and the leverage of technology can be. That's everything that I have. I haven't really paid attention to the chat, so I'm not sure if there are any specific questions at this point for me.
Jen, we don't have any questions in the chat, but I want to ask one of you, because I know you have to leave. What has been the sweet spot, if you will? You gave us those 3 examples. What is the sweet spot of those organizations that you would say would be and should be most interested in moving in this direction? Whether it's size-wise, whether it's number of people in the finance office, whether it's we can't close our books properly, what are those elements that you consider to be tops on the list of those that you've done installations at?
Yeah, well, you just kind of hit on the three metrics. So from a size organization, that one doesn't sometimes people say, well, what about revenue? Is there a sweet spot on the revenue side? There really isn't. That kind of comes down to really the complexity of the sources. If you're an organization that has 20 different sources of revenue, it starts to get super complex from our standpoint. We can certainly come in there, but it really is where maybe there's 3 or 4 sources of funding that are very specific. But Jerry, I think the better metric that we find really is more around departmental size. And it typically is, organizations that have, one, a lot of times it's the one person, straight up to, somewhere between the 5 to 7 people in their accounting department. Because really from that vantage point, we can really come and make a difference because you're probably working with resources that, you really could use 10 to 15, although we probably all could. And really it's being able to come in and work with the team that's there to automate enough processes to alleviate the burden of what they're doing and really streamline a lot of the functionality and take it to the next level. Because that's where we find the biggest issues is individuals bogged down in those processes and being unable to really move things forward.
Okay, Jen, one more question for me, and then we do have one in the chat. Most of the organizations that participate in these webinars, you and I talked about this, have to file some form of a cost report, whether it's a CFR, a Medicare cost report, or some other form of cost report. Can this system be designed to link the reporting within the Intact Sage Intact so that it does, if you will, flow properly or crosswalk over to a required cost report?
Yeah, so one of the things that, from a direct link right now, we don't have a direct link. However, with that multi-dimensional reporting structure, it allows us to utilize one of those dimensions to code the incoming information to ensure that there's adequate downloading that can then be utilized, or reporting that can then be utilized in that capacity. In fact, we do have one client now that we've brought on a little bit smaller scale that's exactly what we're doing. We're handling the Intact reporting and the cloud-based computing, and the other organization individuals in the firm are assisting on the CFR prep, but we're able to work together to make sure that it's set up appropriately from the beginning and from the onset to make that whole process come together streamline. Because again, we're all aware of how complicated that can be and the number of manual processes and spreadsheets that go into that. So it does help to streamline.
Okay, final question, Jen, and then we have one that's come in that we're going to ask Carl before he gets started. This particular individual says they've looked at cloud software, and several of the vendors have not been willing to sign a business associate agreement, which obviously is very important for purposes of protecting HIPAA and PHI, protecting health information, etc. So have we got a solution that works for clients that are involved with health, well, are under the regulations of HIPAA, the Health Insurance Portability and Accountability Act? What's been our experience in that regard?
Well, that's a great question. And I don't know if I've got a direct answer. Because we don't actually, we utilize the software. So we are actually the firm itself that has a relationship with the vendor. We just happen to use it to deliver our services. So from our vantage and our standpoint, anything that's running through work that we're doing isn't necessarily an issue from that capacity, but I'm not certain exactly how that flows back up through the entire relationship. So that's a good question. I'll write that question down and make sure we can vet a more complete answer to that.
Thank you, Jen. And just for everybody that's submitting questions to the chat, if we don't get a chance to answer them or we can't answer them fully, we do, in addition to providing the slide deck available to you, we do provide subsequent to the event the best answers we can possibly provide to all of these questions. So be aware that we will be digging a little deeper on that particular question. Jen, thank you very much for your presentation. Appreciate it. And we're going to turn it over, I think you're going to turn it over to Carl Cadregari. Is that correct?
Correct. Thank you.
Thank you very much.
Thanks, Jen. Thanks, Arch. Arch, you had a question that came up regarding the business associate agreement and how we handle it. I actually have done some work in that area. Because we are downstream from the actual agreement, we would utilize the business associate agreement called a subcontractor's agreement with the vendor. And the BAA, the associate agreement itself, you would execute with us and them at the same time with the subcontractor agreement. BAAs are always a challenge for organizations, making sure that they have an opportunity to get them signed. So it's always one of those areas that you should have extensive conversations with your vendor if they're not willing to sign yours. The covered entity has the responsibility to share it. But it is also very important that your vendor understands what their responsibilities are. And I understand that people are having trouble hearing me. I apologize.
Yeah, Carl, can you turn yourself up at all or no?
I am as loud as I think I can go, Arch. Hold on.
No, that's all right. You just got louder. You were a little softer before, so
okay.
Feel free to shout a little bit.
Is it better
there
now?
You go.
Okay.
Yes, that's better.
All right, fantastic. So not exactly.
And the only other question, Carl, there was a question about what about keystroke latency in cloud-based applications? I'm assuming that you know what that question means. I do not.
Yeah, so basically what that means is you hit a key at your desk and it takes forever for it to show up in the cloud, in the actual application. So you hit the A key and wait, hit the B key and wait, that kind of thing. For many organizations, keystroke latency has definitely stopped or has been so reduced that it is no longer an issue. The problem with keystroke latency is it could be at the cloud or it could be local. So one solution would be making sure that the rate of transmission between whoever's entering in at your site, it's getting through at the highest rate possible to the cloud vendor. I know Steve on Berg also probably would have some thoughts on this area when it comes up to his side. But latency has traditionally been very much reduced due to the enhances in the technology that are out there now.
Okay, let me introduce Carl Candegari, the guy that scares everybody in the technology world and outside the technology world. Cybersecurity, and everybody has read more than you want to read about ransomware, and I'm as anxious as all of you to hear what Carl has to say in terms of the latest updates. Go for it, Carl.
Thank you, Arch. Okay. Like Arch mentioned, we're going to be talking about a number of areas. Well, I am going to touch back on ransomware again because I do think it's probably the most severe threat out there right now. Especially in the not-for-profit arena for a couple different reasons that I'll get into as the presentation goes on. But we're going to talk a little bit about what the current profiles are in the threat environments, what the latest security reports are showing, and what kind of trends can be tended to continue. We're also going to talk a little bit about the transition from going from a remote workforce back to an in-house workforce. Or even a hybrid workforce where you have a significant number of personnel, external as well as internal, and they're potentially traveling back and forth. Then we're going to talk about the return to work efforts in the information technology and the cybersecurity side. I want to point out a few areas that really should be focused in on. Then we want to talk a little bit about some of the current legal and regulatory considerations for the return to workforce areas and things that you should be considering moving forward. First, I want to talk about the global security takeaways. Right? These numbers change on a year-to-year basis, but they always represent the same thing. Information security and the threat actors out there who are trying to do damage to your environment, steal your data, they're not going away. Like you can read the slide, but a significant number of the breaches are still in the healthcare sector, which includes all types of entities, includes all types of organizations. Phishing, for those of you who haven't heard the term before, that's that electronic pickpocketing that tries to happen in your email or other ways through web browsers and other actions. Sometimes it's also called business email compromise. It's still the single largest social engineering rank threat out there. The threat actors are consistently utilizing that to steal information, to trick people, to do damage, to drop software on people's computers that they can then collect and connect to later. Targeted internal and corporate networks are being continually targeted. Some of the statistics out there right now include one organization identified that they had someone sit on their network for almost 439 days. That's over 10,000 hours the attacker was on the network before they saw it. It's been a very, very active year for those threat actors to sit in environments before they did anything. Your e-commerce environments and your e-commerce vendors are also being actively targeted and actively worked against from the adversaries. The ability to put malicious software on those sites has grown again this year with the number of attacks. And a lot of organizations are suffering from the breaches that are identified based on the unpatched software or the software weaknesses that are being exploited from those attackers by the manufacturers themselves. Cloud infrastructure is also an area that always is a concern. When you think about cloud infrastructure, the security of that cloud environment is something that you have to be very, very aware of, mainly because it's a larger target than you are as an individual. If a threat actor can compromise a cloud infrastructure, think about Blackbaud last year. They had a huge compromise. They have access to dozens and dozens of organizations' information, not necessarily just a single organization that would be attacked like a local ransomware attack. And if you notice at the bottom, it talks about the attack surface being an average of 86 days. That's a long time for someone to be sitting in your network collecting information. What they are doing is just that. They're sitting in the environment, they're watching the environment, they're taking pictures of what's happening, they're downloading information that may not be your person identifiable information, but could be network account information, passwords, that type of information to use against you in the future. So all in all, what I'm trying to make sure that everybody understands is these threats aren't going away. These are the current processes, and they're only going to be worsened as time goes on. Now, we talked about ransomware. Arch brought it up as one of the areas that is always a concern. It is only getting worse. It is still probably the single largest problem for most organizations out there that suffer a malicious attack. The ransom isn't something that is necessarily paid by a lot of organizations. And even when you pay the ransom, it doesn't necessarily mean the organization may not still at some point in the future release your data again or come back to you again in the future and threaten to release your information. That has happened a number of times over the last year where information that was stolen 2 years ago, a year ago, the ransomware attackers came back and said, hey, we still have your data. You don't want us to release it. Okay, we have a new ransom for you. I think there was a number of organizations that suffered ransomware attacks, but one of the most public ones lately was the fuel pipeline that was compromised. My understanding is that ransom was an incredibly large number, and that it was paid in order to get the information, back so that their system can get up and running. I have a question in the chat that talks about philosophy regarding paying ransom. If there is any way possible to avoid it, it's always best to do that. And in order to avoid it, you need to have those very strong internal controls wrapped around your data and the protection of your data. Encryption being one of them, having very, very good data backups. We're going to talk about a couple of areas future regarding the reintegration of the workforce coming in, where the desktop environments need to be reassessed, making sure that anybody who has put information other than in a shared space that is normally backed up, that information is protected and recoverable. If you have no other choice, and if you have cyber liability insurance, which is basically mandatory these days, before you consider paying the ransom, you definitely need to get your insurer involved. Make sure that they're involved and they can help you with that process. If you can avoid it, you do. If you have no other choice and it brings your business to a halt, then you have to make a business decision that's in your best interest. One of the things that is true about ransom that we're seeing more and more of, even if you do pay the ransom, upwards of 14% of the data may still require reentry because the technology that was used to encrypt your data can cause damage to that information, and it may not be 100% recoverable. It is something that you're going to have to consider if you pay, that you're still going to have to take some time to update your information and make sure everything is still there. The reality is, the reason why this is such a huge issue is they are making money, lots and lots of money every single day. See by some of the numbers associated on the slide that this is a very, very lucrative business for the attackers and for those threat actors. John, I think we have a polling question.
Yes, we do. What is the current number of vacant positions in percentage terms that currently exist at your organization? A, less than 10%, B, 11 to 20%, C, 21 to 30%, or D, 30% and over?
Okay, Carl, you can keep going. We'll keep that open for a bit. Thanks, everybody, for answering that question.
So next area I want to talk about is the post-COVID-19 era and what to do for the before and after. Okay, it's obvious everybody had a tremendous amount of change that they had to go through last year. A year ago, we were all struggling to identify what's the best processes for working remote. A year ago, the information technology organizations were struggling to find equipment. A year ago, we had personnel who didn't have a reasonable workspace to work from home, and what were they going to have to do, and how were they going to handle it? Okay? This overwhelming need for a remote workforce put a stress onto every single organization. And to that end, the reaction that happened was a lot of organizations put technology into place to continue their business operations, and may not have had all of the individual areas of protection that they needed well addressed because they had to get up and running. They had to work. A VPN, a virtual private network, was stood up in many, many organizations. Many organizations had to buy extra VPN licenses. They were required because they had so many additional people that they had to access. The ability to access remote desktops was enhanced. Okay? And remote desktops is actually one of the highest security areas for potential compromise that's out there right now. It's one of the most utilized avenues for a threat actor to take over systems. They said, in fact, most malware involved remote desktop compromises in at least 30% of the cases that I've been reading about. Virtual conferencing. When we initially went to virtual conferencing, there were security issues with it where people were able to jump onto a virtual conference and just sit and listen to everybody else without them being actually invited. And then the use of personal devices, that bring your own device, that was utilized by a lot of organizations. And they didn't have the ability to acquire 100, 200, 300 desktops, laptops, or other devices, so they relied on their own internal people's devices and allowed them to connect to the network. Okay? These are all things that have to be considered in this post-COVID-19 era. Everything that you did to get people up and running still has to be considered, bringing them back into work, and also dealing with your hybrid environment. That's something that's going to be very important moving forward. Some of the things that are not going to change, okay, is ransomware. Like I mentioned, I hate to beat a dead horse, but it is something very, very important to discuss, okay, and very, very important to make sure. It gives the malicious actors more, ammunition, more areas to attack you. Okay? And then the social engineering, the phishing I was talking about, those areas for trying to trick people have taken place, and people and the malicious actors are taking use of the fear and uncertainty that was out there to exploit individuals' concerns, using COVID-19 as a route to scare people into filling out something. Have you done your virus scan? Have you done your testing? Are you positive? Are you looking for information on this area? Those kind of things. The evidence that remote workforce is bringing all these infections in-house is now starting to really trickle in. Right? The systems and the equipment that are being brought back into the network, okay, are really showing some of those areas of compromise that if they're not caught, okay, or haven't been caught, can internally be accessible by those malicious actors. There's the issue regarding some of the patching that hasn't been done and a few other items, and some of the software, that malicious software, can actually sit there and be dormant, okay, until it sees an entire network to kind of transverse to see what it can do to you. So it is definitely something very concerned with moving forward. Some of the things that aren't happening, like I mentioned before, those new attack surfaces. People are bringing in assets and equipment and storing them without reassessing them. They're adding, the devices, the MiFis, the laptops, the tablets, and just throwing them into inventory and then redeploying them as necessary without sanitizing them. It's really important that organizations, as they bring the technology back in, take a hard look at it. Right? You remember, just because something was quarantined, okay, doesn't mean that the compromise still isn't active or still can't be reactivated. There are a lot of techniques out there that threat actors use that once something has been compromised, even if it's been identified, they can still reconnect to and reacquire the device, even if it's inside a network or inside a firewall. The other item that's not happening in the post-COVID-19 is the required risk assessments on this information, and the significant material change aren't happening or not being performed quite as in depth as they should be. And then because people were used to reacting to the COVID issues and the issues regarding the remote workforce, the hybrid environment now is still as not effectively being controlled as it was moving to the fully remote environment. That hybrid environment, who's going to be where and when, who has to be in the office and when, who can work from home, what are the instructions from working from home, how are you handling everything that's associated with that, like security training, patching, and all the other items. So these are all very, very manageable items that are still just being reacted to instead of planned. Cyber hygiene is taking that whole back seat, like I mentioned before, to getting back to normal. Okay, let's get everybody in, let's get everybody working, let's start doing everything that we did a year ago. Let's make sure that people are working and getting their jobs done. Okay, but it's causing some issues, like I said before, the patch management, the training, the scanning. All of those items are becoming less and less assessed as people are coming back into the workforce. Inventory management is now becoming more of a problem for organizations. I mean, everybody went out and bought all kinds of VPN licenses. They went out and bought tablets. They went out and bought laptops. Now, is that inventory still something that's going to be useful for your environment? Or should there be some type of, redeployment, things that need to be utilized in a more efficient manner over time? Re-identifying what's appropriate for the use of personal devices, okay? And making sure if they are still allowed that the correct monitoring is in place. Another area where this is something that should be considered by the organization and re-inventory, just like with all the other assets, and making sure that you have a clear understanding of who's allowed to use those personal devices and where they are allowed to be used. One of the challenges that every organization faced with that remote workforce was application downloads by the remote worker. What did they download to the computers? What did they download to their cell phones or their tablets? Okay. That needs to be inventoried now. And does it need to be kept? Is it a business tool that's useful? Should it be removed? Again, a lot of additional support and complexity concerns happen because of those application downloads and because of that software that may have been put on that equipment when it was remote. The other item that becomes more and more of a challenge is that whole idea of data protection and recovery programs from the remote devices. If they're in the office, they're easy to back up. Okay, they're easy to make sure that the antivirus is being. If they're remote, It may not be that easy. If they're only connected a part of the day, are you able to make sure that everything is protected on that device? What is happening? Are the users following the rules for saving information? Can you accurately make sure that your information is being protected? The risk assessment that I talked about before not being completed, these are areas that are very, very important for every organization. It is critical to make sure you understand where that hybrid environment, where that return environment has affected your risk. Like I mentioned before, the BYOD items, the personal devices, the applications, what has been scanned, what hasn't been scanned, what are you working on from an asset management standpoint? The comprehensiveness of this review should be something that's considered over the whole remote timeline, not just at the point in time where the assets and inventory is coming back in. Taking a look to make sure what was done in the past is appropriate, control and report on it. Covering the testing that needs to cover the environment is all of the external systems, making sure that your policies and procedures are updated. Making sure that you have a remote workforce program or a remote workforce policy. What about a pandemic policy? Is that something that's going to be required now that it's happened? It's going to happen again. There's no question about that. Okay? Making sure you pay very, very close attention to the devices that are coming in, and before you put them back on the network. Okay? Is there anything that's happened to the design in those devices, applications, software, hard drive changes? Okay? Has anybody changed the controls on that device? And is it still going to be operationally effective for your organization to use because in its current state, or do you have to make additional updates or changes to it? Cyber hygiene, I mentioned a few different times. Comprehensive, every single device needs to go through it if it's been outside of your network for a significant period of time. Okay? A full vulnerability scan. By that I mean using a technological tool to identify what vulnerabilities may be present in that device. It is a scan that takes limited time. It doesn't interrupt the business. It can run in the background, but it gives you an idea of what needs to be fixed on the device. Is there anything that could potentially cause you harm? Many times it also identifies malicious software or configuration changes that you have to have. Okay? Making sure you patch all the systems and get them current. Okay? If you have a VPN that's in place, if you have the laptops out there, making sure the operating system is current, making sure all the applications are current. Okay? And then, like I mentioned before, in many cases, a lot of individuals have had an opportunity to download applications or software to their devices while they were remote. Scanning for that and inventorying them is also something to take a look at and to see if there's any of those applications that are useful for the business, or is it something that needs to change, okay? Or is it something that needs to be deleted? All of this is going to take time, and all of this is going to take planning. So making sure that you work with the information technology organization to get these things in place, to make sure all of this is done in a reasonable amount of time is important for every single organization. As you're going through all these processes, this is also the perfect time to take a look at your hygiene when it comes to access. This is a great time to take a look at something called multi-factor authentication. So using 2 factors to access the network or to access your protected data sets. So those factors are something you are, like a fingerprint, voice print, scan of that, something you have, like a RSA key or a little code that gets sent to your phone, and then something you know, like a password. Right? And 2-factor or multi-factor authentication is the use of both of those, okay, before there's an opportunity, before you have an opportunity to log into the system, whether it be the network or the applications. The next part is taking a look at your data protection. We've all been through the pandemic. Now we have an actionable item to take a look back and say, hey, how did everything work? Okay. Is there needed changes for our disaster recovery plan? Is there needed changes for our business continuity plan? And because of the cyber hygiene issues out there, and because of the potentials for malicious software and ransomware, Is it now time to do the computer security incident response plan update? You know, is there things that need to change in those? It's also a good time to test all of those once you bring the environment back in-house. It's, you know, it's a good time to make sure that your programs and your processes will be effective again, and to start integrating that remote or hybrid workforce into those programs and processes again. The transition that you have to face from, you know, bring your own device, so those personal devices, to an organizational asset. I brought up asset inventory again. Should you be inventorying your bring your own device, okay, into a corporate asset? Well, they have access to your data, so knowing where that asset is and what it has access to is always going to be something that's very important. Again, it's another time to assess whether or not those personal devices are viable in the workforce. Do you have enough local assets so you don't need the user's computer anymore? Is that something that you're willing to, you know, relegate back to the user? Okay? And if you do allow the user to use their own personal device, how are you going to be able to control it? How are you going to be able to scan it? How are you going to be able to make sure it's patched and updated? It's also the perfect time to start looking at to see who used any portable storage devices, those thumb drives or those other drives that were connected to the computer. What did the user do to make their job as easy as possible while they were working remote? Okay, that could add potential storage issues or data encryption or data protection issues that you need to be aware of. Next is the time to assess what that you're doing now can move to the cloud. If you haven't done it during the pandemic timeframe, now is a good time to start, because there's no question there's gonna be another pandemic at some point in the future. And as Jen mentioned before, something like Intact in the cloud allows you to have some redundancy that your local workforce doesn't have to worry about using local resources. They can get to it at any time from a URL. What's appropriate to put in the cloud, and then also what needs to be protected when you put it in the cloud. Like that business associate agreement question earlier, it also has to do with, can you assure what's being put into the cloud can maintain its security and its availability with you? And the latency question, if a whole bunch of people are accessing it when everybody's working remote, are you going to have any issues with that latency, that whole time to enter information and getting the information back? A couple of the regulatory items I wanted to discuss real quickly. Obviously, for the HIPAA people that are out there, this is also a very appropriate time for this reintegration of the workforce. Like I mentioned before, is to get another risk assessment done. This is a material event that could be seen as something that would be required to perform your risk assessment against. The HIPAA security standard specifically talks regarding material changes and redoing the assessment. Now, the New York State SHIELD Act is another law in New York State for those who may not have to meet HIPAA, who have a requirement to protect the personally identifiable information of the clients that you serve or your individual personnel. So the SHIELD Act also expects risk assessments and reasonable controls to be put into place. And those need to be done based on those material changes to the organization. The other thing that the SHIELD Act requires, as does HIPAA, are those contractual requirements for those third parties out there that you're doing business with. So if you're using ADP for your payroll, or if you're using Blackbaud for your donor environment, okay, making sure they fully understand their responsibilities for SHIELD and or HIPAA if it's required, this is the perfect time to do that again. Make sure you're looking at those contracts and they've had an opportunity to be updated. This is also an appropriate time to re-perform your security awareness and your cybersecurity training. After this reintegration or this hybrid environment, integrating that training with your people again makes perfect sense at this point. There's tons of flux. When you have flux and when you have change, people have a tendency to go around the controls, and it's a good time to remind them that they need to be very aware of cybersecurity and very aware of their roles and responsibilities when it comes to that. It's also the perfect time to start reassessing your policy and procedures, adding the updates that are necessary, Like I mentioned before, if you don't have a remote workforce policy, if you don't have a mobile device use policy, good time to reassess whether or not those policies are required for your environment and make the changes in those other policies, like your password policy if you decide to go to multi-factor authentication, or your user access policy if you decide to bring your own devices into the environment. Sitting down and going through those policies and procedures now is a perfect time to do it when you start reintegrating the workforce into the environment. The one thing that's not going to change is security requirements. Everything that we've been talking about today is talking about protecting the environment when you start reintegrating the people back in, okay? Making sure that you're protecting yourself at the best level you possibly can be. Critically knowing where your IT information stands as we transition, okay? Who has access to what data and where is it? You know, is it on those thumb drives? Is it on those USB drives? Is it on someone's personal laptop, okay? Ransomware, like I mentioned a number of times, isn't going away. Making sure that you have conversations with your cyber liability carrier to make sure you understand what their role will be if you ever have an outbreak of ransomware. That social engineering, talking about the user training, is also a perfect time to really focus in again on social engineering or phishing in that training. So you have an opportunity to really reinforce it with all of your employees. Cyber hygiene requires a layered approach. There's no one single silver bullet that's going to fix everything or every potential risk area or every potential cybersecurity. You need multiples, the training, the updates, the assets, the scanning, the vulnerability tests. These are all things that will help you with your protection. And it's also critical to understand that sometimes when you do those scans and sometimes when you do those protections, some of the applications and tools that show up on equipment are required to be used by an information technology organization, but can still open you to attacks if someone were to compromise your internal environment. And like I've mentioned a couple different times, this is not the last time a pandemic is going to affect your IT environment and affect what you have to do to manage your information technology environment and make sure that it's operating as effective as possible. So this is another time to make sure your planning is done and that it is well communicated to your environment. Any questions at this point?
Carl, we have 4 questions for you. You ready?
Yep.
You talked a lot there about cyber hygiene, sanitization of equipment, etc. What are the primary ways in which an organization can verify either on a new equipment purchase or something that's coming in that may be used? What's the best way to make sure that the technology department has in fact performed the appropriate cyber hygiene or sanitization procedures?
That's a great question. That's one where the scanning that I mentioned, the vulnerability scanning, the looking for malicious software, doing deep dives with your antivirus and anti-malware, all of those tools produce reports. What I would suggest is a summary of all of those reports are given to management on a very regular basis. So if you're integrating software, integrating hardware into the environment over 6 months or whatever, once a quarter, make sure that management understands what's been completed and what the output was for those devices. Each one of those tools, those scanners and stuff, can produce those reports very readily.
Okay, second question. You mentioned vulnerability testing, penetration testing. Give us a little perspective on how often, who should perform it, and what does management, if you're not an IT person and somebody in IT is saying, oh, we do that all the time, there's always, I think there was somebody that said trust but verify. What does the management team need to do to make sure that the technology people are being fully accurate if we are doing it internally versus externally? And do you recommend a periodic external process for penetration vulnerability in order to address whether the internal processes are being conducted appropriately?
Sure. So that goes along with the performance of the risk assessments. In the risk assessment, expectations are those identification of all vulnerabilities to the information that's being used. That would require vulnerability scanning. Depending on the standard or the regulation that you're required to follow, that could mandate quarterly scans and internal and external penetration tests at least once a year. So depending on which standards that you are following or mandated to follow, those tests can happen. Now, the standards don't require, like you mentioned, Arch, to necessarily have it done independently. But if you wanted to make sure, if management wanted to make sure that the processes that are being completed are as effective as they possibly can be, having that independent look is something that can absolutely be done. The vulnerability scanning, the penetration testing, both externally and internally, is critically important. And having someone with the expertise and the knowledge base to do that is very critical. There's many organizations out there can absolutely handle the vulnerability scanning. It's a technological tool. It produces fantastic reports that can be shared internally at IT and also with management. But penetration testing is a different skill set. Now, that's a human utilizing some very advanced cyber skills to see if they can take and exploit those vulnerabilities, compromise the environment. An external penetration test sees if it can get through the firewall or find some other way to get to information. An internal penetration test is utilized to see if someone is in your environment, how far can they get within the organization to cause you harm. But like I said, pen testing should be done at least annually. The vulnerability scanning probably at least quarterly. Most of the standards that you have to follow for protected information suggest that.
Okay, third question. Thank you for those answers so far. You mentioned the construct that 50% of breaches in IT are done through social engineering or phishing. I think everybody pretty much understands the phishing term now. Can you just give a couple of examples of what you mean by social engineering?
Sure. So social engineering would be something that traditionally external attacker utilizes some type of information that's been posted in a social networking environment. Okay? So your Facebook, your LinkedIn, your Twitter, your Instagram, okay? Non-private information that can be used or utilized to trick someone. The other area that social engineering utilizes quite a bit is information that has already been compromised and is available on the dark web. Okay? So a dark web scan as to what's out there based on your users is always a very interesting process to go through. By that I mean there's hundreds of thousands of usernames out there and passwords that are available on the dark web from prior breaches and prior attacks. So if the user uses the same password and username for their LinkedIn account that they do for their network account, or at least the same structure, okay, the malicious attackers can utilize that information to craft an attack against an individual. The other way that social engineering can happen is if a person has visited a malicious site, a malicious website, or a compromised website, many times the computer will download something to the local device that's then used to attack the individual. So that's also another way that social engineering can be utilized. So you've got the phishing, you've got the spear phishing, which is attacks individuals specifically. You've got the dark web where there's compromised credentials already out there. And you have the malicious websites that can compromise from a social attack as well.
So I've described you as scary many times to listen to, and I think you appreciate what I mean when I say that. This next one comes from me, so this is not from the audience. Can you think of a good war story that you could tell folks based on project work that you and your team have done? I think I've heard you say that there's a number of clients that have hired you thinking that they've got themselves T's crossed and I's dotted, and you've done a simulated phishing attack and found unbelievable levels of non-compliance within the employee group. Can you just give us a brief description of one of those war stories so people understand that we're not talking about things here that don't happen each and every day?
Yeah, so probably one of the ones that comes quickest to mind is an organization that hired us to do an external penetration test. Okay? This organization is fairly large and fairly sophisticated. By large, I mean probably 10,000 employees, okay, and pretty sophisticated. What ended up happening with the external attack was about 35, 40 minutes into the attack, the attackers were able to identify on the firewall, one of the ports that was on the firewall still had the manufacturer's password, okay, and access controls on it. So the manufacturer used a administrative name and an administrative password that is publicly available to anybody. And because they hadn't fixed it on that one port, we were able to gain access through that almost immediately within 40 minutes. Okay? The issue with that, more than anything else, that was the most scary, is when we went back to the client, which was immediate. As soon as we identified it, that's a critical issue. We picked up the phone and talked to our contact who had signed our engagement letter. The information that we got back from the company was they don't understand how that could have happened. They installed the firewall 6 months ago and hadn't touched it since. So the challenge now went back is hey, you have an open port that it sounds like has been open for at least 6 months. So now we have no confidence that somebody hasn't been sitting in your network for 6 months. So we would suggest that you launch your cyber liability insurance and tell them what's going on, get a forensics investigation performed. That investigation was performed. Luckily, it came back negative, so there was not a compromise. Okay? But going 6 months with something that easily compromised, okay, could have been a significant issue for them. Obviously, they were an organization that had to meet multiple regulatory areas, HIPAA and many others. So it could have caused them a tremendous amount of embarrassment and cost them literally millions and millions of dollars in sanctions.
I'm sure that this is the last question before lunch. I'm sure that many of our attendees, because we do a lot of regulatory compliance webinars as well, one of the struggles has always been, do we have the right number of people, resources, and capacity in regulatory compliance? The same question relative to IT. This may not be fair to ask you right now because rules of thumbs and statistical guidelines might not be something that you have at the top of your head, but I would like to be able to provide participants with at least a sense from you as to technology staffing requirements. If you listen to everything you said and everything that Steve's going to say this afternoon, are there guidelines out there? For example, you mentioned a 10,000 employee organization. How many people in IT per user? How many people on the help desk per user? Are there any of those that have been developed that are readily available, which would be of value to the IT directors and the CFOs that are on this call with respect to, if you will, upgrading what is typically a segment of an organization which gets sometimes the short shrift when it comes to budgetary positions?
Yeah, I think after Steve's presentation, he and I can put our heads together. There's tons of statistics out there. We'll work together and come back to the attendees with some rules of thumb to follow.
Okay, thank you very much, Carl, and I appreciate your presentation. It was very, very well done. And Steve, some of those questions that I just asked of Carl, I will ask of you again when you present this afternoon. We are going to do are we going to do a polling question?
Yes, we'll do this polling question.
Just before we break for lunch.
What is the approximate number of individuals leaving your organization in calendar 2020 for any reason, voluntary?
And we agreed we'd come back at that point in time. I want to introduce Jeff Paley, my partner in the firm, and what I consider to be the guru subject matter expert when it comes to federal stimulus, particularly with respect to the various aspects of federal stimulus and the level of confusion out there that you need to be making sure, and we've said this before, making sure that you're working with an outside party to evaluate all of the variables that you need to consider as it relates to maximizing your utilization of stimulus. With that, Jeff, I'll turn it over to you.
Thank you very much, Jerry. Thanks everybody for rejoining us after lunch. Good afternoon. The title of this section talks about questions yet to be answered and stimulus. This is a very broad topic. There's a lot of details we can get into here. We're actually going to focus on two things. So if you want to go to the next slide, the first thing we're going to focus on is the double dip, and then we're going to talk about the employer retention credit, because we're seeing a lot of confusion on both of these topics, and they've become much more common topics of conversation with providers. We're going to focus on some of those things, hopefully, so you can be informed as you go into these considerations. So if we go to the next one. So what is the double dip? Most of you probably know this already, so some of this might be a little bit of review, but we might as well start at the beginning. The double dip is the idea that multiple funders believe they're paying for the same expense. So as most providers, many nonprofits, you have multiple funding streams coming in. And now when you layer on some of these federal COVID relief funds, you may have more people trying to pay and cover your expenses than you have expenses. So in that circumstance, one of the funders might believe that they should not have paid you those funds and will want to either have those funds returned to them or reduce your funding in the future for the effect of that. So this presents risk to organizations who are funded that way, and this double dip question is one that is becoming more and more commonly talked about and addressed. If we go to the next slide. So, are you a double dipper? And you may have double dip risk that you may not have thought about, or you may have thought about it and you're not quite sure how to evaluate it. But really, all these COVID relief funds, because they are dependent on your use, if you will, of payroll expense and other non-payroll expenses to support your claim for the funds, subject you to the potential that you might have a double dip risk, either with betwixt and between these different COVID funding sources, or even with your recurring funding that has nothing to do with COVID. So, for example, the PPP and the employer retention credit, those are the two most common double dippable scenarios. Those are where you have to use payroll dollars to claim the funds under both of those, but you cannot use the same payroll dollar to claim for both of those at the same time. So you have to take your payroll and allocate it correctly or appropriately to the various funding streams. Same thing goes for these other credits for sick leave, extended family medical leave, even this more recent vaccination leave credits. There's the provider relief funds, which Margaret's going to talk about more in a minute, but that presents double dip opportunities or risks. The shuttered venue operator grants, definitely, FEMA grants, and then there's lots of others. There's literally dozens of other funding streams for different types of organizations in these pieces of legislation. Let's go to the next slide. You also have to think about your recurring, whether it's federal or state or even local, non-COVID funding. If you have grants where there's another funder who believes they are covering some of your payroll or non-payroll costs, if you need those costs to claim your revenue under these COVID relief funds, you are at risk for double dip. And so this is a challenge. Many nonprofits have risk or some kind of exposure related to double dip. And the level of energy that you put into managing this can actually help address the risk. And we're going to talk about that. If you go to the next slide. So if you have, again, many organizations have received some of these funds and have specific elements of COVID relief funding that's presenting double dip risk. I think there's certainly a risk, certainly if you're one of these types of organizations, but there's many others. And I would suggest that any organization who got any kind of COVID relief funds should be thinking about, at least strategically at a high level, is there double dip risk inherent in claiming all these funds? Go to the next slide. So how do we manage the double dip? There's really 4 questions we think everyone should be asking and answering for your own organization. do you have enough eligible expenses to legitimately claim the COVID relief funds and also claim your non-COVID funding? So this can come down to if you're an organization that files a CFR and you're claiming expenses on the CFR to support your reimbursement under funding contracts from New York State, are those expenses also going to have to be used to claim your revenue under one of these COVID relief funds? And if they are, that's a double dip risk that you should be thinking about and managing through. Number two, is your documentation adequate to support the assertion that you need expenditure to support claims? And that falls right into number three. If you claim all these COVID funds, are you going to have a big surplus? And if you are, how do you present that to your various funders to say, yes, we have all this extra money, if you will, because from a funder's perspective, if it drove a really large surplus for you in your current fiscal year, how did you apply unique expenses to all those revenue funds if your revenue was much higher than your expenses? And it's a very difficult thing to explain your way through if you haven't strategized around it and understood where the exposure is and what kind of risk there might be associated with that. And then number four, if you're in that situation where you can't explain adequately how you can claim all your various funding streams with unique expenses, you have to think about, am I going to have to pay some of this back to somebody? Or is one of my funders going to claw it back and force me to repay it to them at some point in the future? And if so, do I have to book a liability for that estimated amount? And then how do I estimate that amount? So it becomes a risk management situation where you have to evaluate at the end, do I need to book a liability for this potential of a payback? Go to the next slide. So this gets very complicated. Part of the reason it's complicated is that we don't have clear guidance from the various funders. Some of these programs have very clear elements of how you would pay money back if you can't claim it all. So like on a PPP, you apply for forgiveness for as much as you can, and if that's not 100%, you have to repay the rest of it. It's very clear. For some of these other things where you have a state-level funding stream and you're claiming, let's say, expenses on a CFR or some other kind of cost report, or even on a vouchering process with a grant that's state-funded or county-funded, there's no provisions in there that says, if we have a global pandemic and the federal government makes a bunch of funding available, what do you do with the surplus of expenses that you would have normally applied to this contract? There's nothing in there that provides guidance. And unfortunately, in New York, we have different agencies who provide or who govern, if you will, different types of funding. So you have OASIS, OMH, OPW, etc. Each of them seems to be communicating individually. There is not a consistent position across the state. And so if you're a provider in one area, you might hear from another organization something that they heard from their state funder. It might not apply to you because the different funding streams and the different state agencies are coming up with different guidance. And I use the word guidance loosely because in many cases the guidance is really sparse. The other thing with this is there's differing timelines for utilizing the funds. For PPP, you have this 24-week period. For employer retention credit, it's really determined on a quarterly basis. And for your recurring funding streams, it's based on the contract term. So there's all kinds of different time periods involved. This idea of being the funder of last resort is something we've heard from some of the state funders. And this complicates it if you have more than one funder who has told you that they believe they are the funder of last resort. Because you can only have one funder of last resort in this scenario. But unfortunately, in the environment we're in right now, different funding sources have taken this position. And how do you manage that when more than one funder has said they're the funder of last resort? Also, there's a lot of different terms and conditions related to repayment or unused or unclaimable funds. So if you are confused by all of this, you're in the right place. I mean, we'd love to bring total clarity to all of this for you, but the funders have not provided enough information to get to a total clarity position on some of this stuff. So it is confusing.
Jeff, if I could add to the comments you just made, there is a number of attorneys in the state that do not believe that New York State has a regulatory provision that anticipated a pandemic and this type of federal stimulus. So the question of these things being complicated, they are complicated. They may end up in litigation in that New York State may not have a legal right to claim their normal funding to you as being recouped because of double dipping, just because you got money from the federal government. So this could go on for quite a while, which makes financial reporting even more complex. Back to you.
But that's a great point, because there's a lot of what I would call advocacy and what some might call lobbying related to this question, particularly at the state level. And if you're a provider, you're probably part of an industry group within the types of services that you provide. And those industry groups have been very active across the state, and we recommend that you participate in that for two reasons. One, to keep in touch with kind of what's going on, but also to advocate for a more lenient position, if you will, from New York State that's more reasonable in terms of how you can recognize and retain some of these funds without, with a reduction of double dip risk. Let's go to the next slide. So what to do? We have eight steps here. So there's no single path. I wish I could tell you, like, do 1, 2, and 3, and you're going to be fine. But unfortunately, that's not how it works. But there are some things you can do to mitigate the risk. First one is do the analysis. And this means looking at your total costs and understanding which funding streams you have to apply those costs to, and doing that in a risk-based order. So the riskiest funder, the one where you feel like there's the most risk for a clawback or a repayment of some sort, apply to that one first. Then take the rest of your costs and apply it to the next one. That requires you, in number 2, to evaluate the risk. So you have to think about, what's my most important funding? What's the funding where I believe the message from the funder presents the most risk? And then you want to protect that in number 3. Number 4 is understanding the repayment options. There's been a lot of interesting discussions lately about, if I have a double dip, should I just repay my PPP loan, or should I take all the forgiveness on the PPP loan and let the state funder catch up with me whenever they get around to reviewing my CFR or my paperwork, which could be 2-3 years down the road, and is that better from a cash flow perspective? And those are the kind of question that you have to evaluate. Go to the next slide. So make sure that senior management and the board are aware of the position you're taking on some of these things. There is risk inherent in this analysis, and you do not want to have a big surprise down the road that the board is not aware of, because you're taking on some risk related to the double dip. Number 6 is get help. I think Jerry said it. This gets really complicated at times, and I know we're helping a lot of providers around the state and beyond work through some of these questions. There are other providers doing the same thing, but your internal team is seeing your situation, but as an outside advisor, we're seeing literally dozens or hundreds of different situations. There's different perspectives that can be brought to the table when you're seeing multiple scenarios across the entire state, and therefore the value of getting help is real. The other one is stay informed. Definitely, when we talk about the advocacy and making sure you're aware of what's going on with your industry groups and with your funders, that's very important. And then being flexible, because look, if there's one thing that's been constant throughout this whole time period since March of 2020, is that things have changed. The rules changed, the funders changed their position on things, so you have to be flexible no matter how detailed and involved your analysis has been. If the rules change, you may have to go back to the drawing board and revisit that whole analysis. So you have to stay flexible and roll with the changes, as painful as that may be after we've been through all of this for all these months. Next slide. So ultimately, it's a risk management process. And I think making sure that it's considered as a risk management process within your organization. This is not simply an accounting task. This is a risk tolerance process, which is why having the board and finance committee involved, senior management, program people, not just the folks in the accounting group hammering away at spreadsheets, but an overall sense of risk and an understanding across the management and governing board of what kind of risks you're taking on. I've been telling people, and I really believe this, you cannot reduce this risk to 0. You can reduce the risk to low, but to get it all the way to 0 is going to be almost impossible. So there's some level of risk at basically every organization. and that should be understood across the governance group. If we go to the next one. Oh, polling question number 5.
One question. What was, apologies. What is your current starting hourly compensation for your frontline service providers? For example, CNAs, direct service providers, etc. A, less than 12, between 12 and 13, C, 13 and 15, or D, 15 and more? Keep going when Jeff talks about the employee retention credit.
Thank you. So, shifting from the double dip to the employer retention credit, many organizations have been looking at the employer retention credit with some level of caution, and others have been looking at it with a high level of optimism, perhaps too high. So we're getting tons of questions about the employer retention credit. So I want to go through this briefly to just talk about what it is and how it works. So if we can go to the next slide. So what is it? It's a COVID relief funding program that happens to be paid through your payroll tax filings and in the form of a payroll tax credit. Initially, when the CARES Act was passed over a year ago, employers who got a PPP loan could not do ERC, and therefore most organizations did not pay any attention whatsoever to the employer retention credit. On December 27th, the law changed, allowing organizations that had PPP loans to claim ERC if they were eligible. And so there's been a lot of activity through the first quarter, and now even through the second quarter, related to ERC for those organizations who didn't pay any attention to it before the end of 2020. So if we go to the next slide. Excuse me. So are you eligible? Is the employer, there's two ways really to be eligible. One is you can say that you had a significant suspension of your operation during the calendar quarter due to orders from an appropriate government authority. So you were shut down by government order or partially shut down by government order. The second way is to show that you experienced a significant decline in gross receipts. And for 2020, that's defined as a 50% reduction in your gross receipts as compared to that same quarter for 2019. So you have to understand this eligibility is totally different than PPP. So there's a lot of folks who think, well, I got a PPP, so I must be eligible for ERC, and that is simply just not true. Go to the next one. So what does it mean to be fully or partially suspended for the purposes of the employer retention credit? The law talks about government orders from the federal government, but the interpretation means if you get a government order from the state level or the local level, your city or whatever, all of those count if they're in response to overall federal emergency and guidance. So if you were closed for whatever reason, or by whatever level of government for COVID-related reasons, that counts. And as curtailment for ERC purposes, there's a couple examples there. But there's a couple things that keep coming up that we need to make sure we're not overstepping here. If you close voluntarily, like there was no government order that told you had to curtail your operations, but you did anyway, that doesn't count. It has to be directly related to a government order. And the other one is we have providers who are saying they had to cease or reduce operations because they couldn't find enough employees. That is also not a valid reason to be eligible for ERC, even if you say, well, I can't find enough employees because of COVID on an overall basis. Well, no. For ERC, you have to be shut down because of a government order that caused you to have to shut down. It has to be more direct than people are getting their unemployment benefits and therefore they don't want the jobs that I'm offering. That doesn't work, so it's important to keep that in mind. Next slide. So what is a significant decline? We talk about this 50% reduction of gross receipts. A couple things about the gross receipts. Gross receipts is not your revenue that you would report under regular accounting rules. It's a specific definition in section 6033 of the Internal Revenue Code. And if you're an organization that files a 990, that means box G on page 1 of the form 990, if you're familiar with that particular form. In this example on the slide, they have one quarter in Q2. Their 2020 revenue or gross receipts, was 70,000, and in 2019 it was 150,000. So their actual for 2020 was only 46.67%. which means they had a reduction of greater than 50% in Q2. So they would be eligible for ERC for that entire quarter. The other thing here that catches people is this aggregation rules. If you are part of a related or a group of related entities, as a nonprofit group, you have to think about what the aggregation rules are, and it's important to know the aggregation rules for ERC are different than the affiliation rules for PPP. Go to the next slide, please. So, what wages can you include? Well, for 2020, there's really two categories you can fall in. You can qualify as a small employer, or you can not qualify as a small employer. If you qualify as a small employer, you can take the ERC for all the wages you're paying to all your employees. So how do you get to be a small employer? You have to show that you had fewer or 100 or fewer full-time employees on average in 2019. Please keep in mind when they use the abbreviation FTE, that is not full-time equivalent for ERC purposes. It is full-time employees. What this means is that part-time people do not count at all in this calculation. So this is very different than the calculation for PPP. It's very different than the calculation for a lot of other things you do as a nonprofit. So this it's important to make sure that you're counting people correctly. Full-time people means someone who works over 130 hours a month. You're supposed to figure that out for each of the months of 2019 and then take the average. And if that's 100 or fewer, you're a small employer. Now, if you're not a small employer, because you have more employees than that, in 2019, you can still take the credit, but you can only take it for people who were not actually working, but you kept them on the payroll. So there can be situations. The most common scenario with that is if you're over the 100, but you had a layoff in 2020, but continued to pay people's health insurance. I'm sorry, I said layoff. I should have said furlough. If you did a furlough, but continued to pay people's health insurance, you can claim the ERC for the health insurance costs that the employer paid. So that's a fairly common way to make a claim under this. Next slide. So the maximum here for 2020 is from the time the emergency was declared in March through the end of the year, you can take 50% of the first 10,000 of compensation per person for the eligible people, again, based on whether you're a large employer or not. The biggest factor here is if you had a PPP loan in 2020, you have this 24-week period where you need to use at least some of your payroll for the PPP forgiveness. You cannot use those payroll dollars for ERC, so you have to look at the period of time before you got your PPP loan and the period of time after you got your PPP, or after you finished your forgiveness period for your PPP loan. And then you can allocate the wages that are during that 24-week period, and this is where you get into some spreadsheet magic to understand how much of those dollars of payroll and non-payroll costs can I allocate to PPP to max that out, and then also make a claim under the ERC. This can get into some fairly complicated stuff, but if you like spreadsheets, you are probably the right person to be taking a look at some of this stuff. We go to the next slide. So the differences in 2021. In 2021, the rules for ERC are different. First of all, it's a quarter-by-quarter evaluation, not for the entire year. So you can take a 70% credit of the first 10,000 per employee per quarter. So it can be a lot more money to get the ERC in 2021. The small employer definition changes from 100 to 500, which means a lot more organizations are able to take the ERC for all of their employees, regardless of whether they were working or not, in 2021. You can also, because we're currently in 2020, we're currently in 2021, sorry, no time machine here. In 2021, you can actually collect the credit by just not paying your payroll taxes to the IRS. That's opposed to in 2020, if you go back now to try to claim this for 2020, you're amending your 941 forms for 2020 quarters, and you have to apply for a refund from the IRS and wait for them to pay you. So the timing of cash flows is much better in 2021 if you elect to not pay your taxes and collect your credit that way. And also, the eligibility changed. In 2020, you had to show a 50% reduction in gross receipts. In 2021, you only have to show a 20% reduction in gross receipts, and that's still compared to 2019. So if you can show that you had a 20% reduction in gross receipts for Q2 of 2021 as compared to Q2 of 2019, you're eligible for ERC for Q2 of 2021. Next slide. So the three most common mistakes, there are mistakes made in these calculations for sure. The first one is failure to consider the aggregation rules. Many organizations consider the affiliation rules that the SBA issued related to PPP loans, but the IRS's aggregation rules for ERC are a different set of rules. Many of the considerations are the same. So you probably have a lot of the information you need to navigate through this, but please be aware, it's not the same. So if you establish that you're qualified for PPP in light of SBA's affiliation rules, that does not automatically translate to ERC eligibility if you have related parties. The second one is incorrectly counting people. Again, for ERC, you're counting employees who work 130 more hours or more per month, and you're ignoring everyone else who works less than that. So counting people is very different than it is for PPP, and really for just about anything that we think about in terms of counting people. And then calculating gross receipts, you cannot simply take your monthly or quarterly statement of activities and look at that as your gross receipts, because you have to calculate it under IRC section 6033. It's not the same as GAAP revenue. It's not the same really as any other way that you would report it. And the biggest difference is if you have an investment portfolio, gross receipts includes the gross proceeds from sale of investments, not the net realized gain or loss. So that could be a really big difference that can swing the calculation if you have an actively traded portfolio, especially with the volatility in 2020. A lot of organizations had a lot of investment activities, and that can really change the calculation. So be really careful when calculating gross receipts. If we go to the next slide. Oh, question number 6.
Polling question, sorry. Move back. Polling question 6. What is the approximate percentage of your senior executive management team who are over the age of 60? A, less than 10%, B, 10 to 30, C, 31 to 50, D, more than 50%.
You can continue, Jeff, while the polling is completed. Oh,
That's actually the end of
that was the end?
Yep.
Okay, we got one question for you.
Yes.
And this might not be something you're able to answer. But during 2020, OPW came up with a supplemental funding for programs that were shut down because of day services not being eligible.
Yes.
The question is, does that supplemental funding disqualify the organization or make the ERC a double dip possibility?
Well, that funding, I know exactly what you're talking about. And yes, it does complicate the double dip calculations. Many providers provided or paid their employees some kind of, call it hazard pay or something else, an incremental addition to their hourly rate during this time period. And to the extent that that incremental pay would drive a deficit in that program, and I think when I say program, I'm thinking about that column of the CFR. The more deficit you have, the more room you have to apply these federal COVID relief funds to that program on the CFR. If this supplemental funding that you got from OPW reduces that deficit, that means you have less wiggle room, if you will, to claim funds against that program from other sources. So it does make your double dip situation slightly more complicated. It's one of the many factors that you have to think about as you're going through the double dip evaluation.
Couple more questions here, Jeff, real
Yes.
quick. What is the deadline to apply for ERC for 2021?
This is the beauty of the ERC. You do not apply for it. There's no application. You simply, you have to understand that you're eligible. You have to have your calculations about and documentation of eligibility in place, and then you simply claim it on your quarterly 941. So if you're talking about the second quarter of 2021, you haven't filed that return yet because you will have to file that in July. So you would simply claim the dollars that you're owed for the credit on your Q2 941. When you're going back to older quarters where you've already filed the 941, you have 3 years to amend the 941, and that's how you would claim it for an old quarter that's already closed out, is you would amend the 941, you have 3 years to file that amendment and claim the credit for those time periods. But again, you have to have the documentation related to eligibility and the calculations, because the IRS can audit that return anytime they want to once you file it. and you want to have support for the credit that you claimed on that return.
And then the last one, wasn't there a cutoff as of March 31 to be able to take the automatic don't pay taxes option? And after that date, don't you need to file amended returns?
At the end of each quarter, during the quarter that you're in, so right now we're in Q2 of 2021, you can still elect to not pay your taxes to collect the credit. However, if you're trying to go back to Q1, which is already closed out, then you would have had to make an election on your first quarter 941 to essentially carry forward the credit to Q2. That was an option that you could have made when you filed your 941. I will tell you that payroll companies, if you're working with an outside payroll company to file your 941s, their default position was to not make that election. So most people, if they weren't thinking about it and specifically conversing with your payroll provider about that option, you didn't make that option, which means you have to wait now for the IRS to send you a refund for Q1, and you can only do the don't pay my taxes option on a go forward basis. I will say as a side note to that, those who had a credit for Q1 of 2021 and included it on their originally filed 941, the IRS is already paying those refunds. We know a lot of organizations have already received the cash already. So if you did that and you haven't received the cash, you should receive it very soon. So the timing difference between not paying your taxes in March and getting your refund in May was not as great as everyone had feared. So whichever option you went, you probably have that cash already because the IRS was pretty quick at turning those around.
Jeff, your knowledge in this area is phenomenal, and I think everybody can understand that are on the phone. So thank you very much for that presentation. Our next presenter is Steve von Berg. Steve is the CEO of Center Information Services, and let me give you just a little bit of background. They have been a client of ours since their inception a little over 15 years ago. They were formed by 4 nonprofit organizations affiliated with the Siegel Center as a shared service IT function. Over the 15 years, Steve's organization has morphed into what I would describe now as a management service organization, MSO, providing IT services, which Steve will describe. And again, going back to the theme that I announced at the beginning of this session, of in the new normal after the pandemic is fully exhausted, if you will, hopefully sooner rather than later. Many of our organizations, in order to maintain cost efficiency on the administrative side and the administrative support side, will be looking at outsource accounting, outsource IT, outsource HR. Nobody thought that Tom Golisano in 1975 was going to get employers to give over their most sensitive payroll information for purpose of payroll processing. As you know, Tom Golisano is now one of the richest people in America. So as we look at this outsourcing construct and listen to Steve's presentation, I think you want to put yourself in a different mindset from where you might be pre-pandemic or during the pandemic. And with that, Steve, I'll turn it over to you. Thank you for participating with us today. Are you on mute by any chance, Steve?
That must be better.
Oh, there we go. There we go.
Okay, sorry about that.
You did that purposely, I'm sure, because you wanted to hear, are you on mute? All right, you're on. Go for it.
I sit in so many meetings and that happens to somebody else and I'm like, how do they not know they're on mute? Well, that's my lesson. Jerry, thank you very much. I'm pleased to be here, especially with the Bonadio group. Learned a lot the first 3 sessions here. As you said, CIS was formed in 1997 through the alliance of 4 not-for-profit agencies. And their idea then was pretty advanced. They each had money to spend on IT. And Dan Meyer was the head of the L. Siegel at the time. And he said, we could each do the same thing 4 times, or we can pool our money and build something that's better for all of us. And that's what they did. And that was the genesis of CIS. We are a not-for-profit organization, and that comes into play every day with the customers that we work with. We have a short list of lower price avenues for purchasing technology at below market prices. For people in the non-for-profit world, that would include TechSoup, There's other charity pricing venues that we go to, and we believe that we get really good prices for our clients. Our rates for services, again, as a not-for-profit, did a little bit of an industry survey about a year ago, and we averaged about $30 to $50 per hour, less than other MSPs in New York State. And I would submit that we have similar quality level engineers, so there's not really a sacrifice, thus our title, lowering your costs, not your expectations. We're motivated to do what is right by our clients, which has very often meant getting them more out of what they already have rather than trying to sell them something new. I'm not sure that the people that are actually in the hardware selling business would adhere to that same motivation. We have some clients that have money and they're able to spend it on refreshing of technology. We have other clients that really need us to help them stretch their dollars without compromising performance or compliance, and we've done very well at that also. And finally, we work with many grant providers and have learned ways to respond with successful outcomes. We've gotten in the education business with charter schools. There was an E-rate program, and it's not the simplest thing, but we've invested a lot of time in working with people in that program and understanding what they like to see in their grant proposals, so that as a middle person here, we can make it easier for the grant people to assess and accept grants submitted by our clients. So outsourcing, this is really more generic. While CIS does these things, if somebody is looking at outsourcing, it doesn't necessarily have to be CIS. But I think that, putting this out here for somebody to have a comprehensive technology services and the staff, IT is getting more and more complicated, and people just can't afford to have an IT specialist in virtualization, data retention specialist, a security specialist, a networking specialist. So a lot of times in the smaller organizations, they have pretty good generalists, but even when we get involved with those companies, the generalists are happy and relieved to have some of our services in there so that we can help them either with a knowledge transfer or to collaborate with them when they're selecting solutions. At CIS, we do have we have our own cloud-based infrastructure. We have a full data center on Elmwood Avenue, and we have that replicated over to a facility called Central Logic. Both are, they call them hardened data centers, but they have appropriate security and multiple ways to get phone and data lines back and forth. So if one of them fails, we still have connectivity, those kinds of things. The fires, the halon fire suppression, all these extra things that you would expect in a data center that people might not have on their premise servers and systems. And that kind of blended into point 3 with a separate data center. That helps us to have a level of separation, and that helps for both security and disaster recovery. We also have developed a proven workflow, and I think that's real important. There's a system that starts with a first phone call. We want to get people documented into the system. We want to help them, understand their problem, resolve their problem, document that problem, and then confirm with them that, we have addressed the root cause there. And to keep a number of incidents that come in, in sync and moving forward, that's a helpful process for us to have. We do have a team of senior engineers that have been here quite a while. We have some new younger folks in here too, and they're learning from the older folks, sometimes faster. But it's good to have a good diverse background of people here. As I mentioned earlier, to have areas of specialty like security and networking and some of those other things. That's something that as a larger IT organization we can afford to do that some of the smaller organizations cannot. Security, we heard from Carl, and there are a lot of things out there, and it's a fast-paced environment, that's for sure. There's a lot of malicious cyber attacks, and he told us about what the key ones were. I have a section on security, and I'll talk more about that at that time. And then the focus on regulatory compliance. Outsourcing organizations, including CIS, we need to have our own disciplines that when we're subjected to HIPAA or some of the other regulations, we can't just, enforce those amongst our customers. We've got to adhere to those ourselves. So there can be a lot of benefit to having the shared services model, as I mentioned from our inception, and Jerry touched on this, the collaboration of the four companies coming together at the beginning. I've talked about this. We can receive a higher level of specialization, and that really helps when we're trying to solve issues or getting into things that sometimes even our technology folks are talking to tier 3 and tier 4 level engineers at Microsoft and Cisco and Dell and those kinds of things. And a lot of times it takes a high level of knowledge to even understand what they're trying to explain to us what to do. We negotiate favorable pricing terms with our third-party vendors. A lot of times it's different when you go to somebody and you say, well, we're representing, 2,000 endpoints versus, we've got 40 PCs. Sometimes it matters, sometimes it doesn't, but we've had pretty good success negotiating those contracts. The other part here is being a larger entity, we do get assigned strategic account managers, and that's helped us a ton. Recently, one of our organizations was ordering Dell laptops, and there was a delay on those due to the screens and a product issue. We were able to work with Dell, and we got things escalated from about 4 months to about 4 weeks. So that helped with the account management we have. Also, I don't think I'm speaking out of turn when I say a lot of people have issues with Spectrum. We have been recently assigned an account manager there. Doesn't get us everything we'd like as fast as we'd like, but it's somebody to go to, and they've proven to be quite a bit of help for us as well, in addition to the other resources we have. So having the account manager, they'll also share too future products. We have one customer that buys laptops in a quantity of over 100, and we will typically invite Dell to come in with that customer, or more recently have a Zoom meeting. We talk about what's coming down the pike in the future. Because if you're installing something over a period of time, you'd like it to be as consistent as possible. So we really would like to see what's coming, and that helps us make better decisions about what we're purchasing. Deploying enterprise level solutions that might be too expensive for somebody to do on their own. This log monitoring that I will be talking about is a good example of that. We paid over $80,000 for that service. We have 4 people trained on that service, and it's something that we're looking at every day. We're going to turn around and offer that same service to smaller customers, A, for a lower price because we have more people using it, we can leverage that. And B, if you just need 12 licenses, we can give you 12 licenses. If you go to the main manufacturer, there's a minimum purchase that you have to get. So we're helping deploy those enterprise level solutions and doing it in a way that can be consumed most efficiently by smaller organizations. And then, to the extent we can standardize on solutions, we like to do that. We have a number of customers here, certainly Office 365, FundEasy, Great Plains. There's a mobile device management tools that we use. To the extent that customers are purchasing those similar ones, and we're not here to force anybody into anything, but to the extent that we can standardize on those, that allows us to get people further trained in our organization, and it allows us to give better support based on familiarity across multiple companies. So, in terms of saving money and getting more for our dollars, the shared services model has never been more relevant and value infusing than it is, today. I talked about technology services a little bit, and we're here at different levels with our clients. I think I'm trying to remember, bear with me, the first person that spoke, I remember Jen. She was talking about the benefits of that and outsourcing. And with CIS, we have a lot of different levels of technology, and nobody has to sign up for everything. Some have their own staff and just need us to, be their specialist for networking. Or we have one customer that they're a little bit more sophisticated, so they like their IT people to handle the bigger, more complex needs. We have the automation at the front line with our call center and our ticketing system, so they use that, and we end up dispatching their technology people. At the other side of that, we have people that have less knowledgeable IT people, and they handle the frontline questions, and anything that they can't handle, they escalate to us. And then we have just about everything in between. we start with the server-based and system administration. That's really the high-level staff that we have, and that works with the servers and performance, a lot of the high-level networking, the backup and recovery, and the security side of things. We also have a desktop user-based group that focuses on end users, any problems they may have with their workstation, with Microsoft Office. Those are more individual kinds of issues. And if they get to be bigger than that, then that would get escalated internally to us, to our system administration level. We also have a call center service. That's the first line. They receive both calls, they receive emails, they receive texts actually, and they receive the first call. We're trying to get our percentage of first call remediation as high as we can. We're at about 70% now, where we're able to resolve the issue on the first call, and we continue to work on that. But that's a real good time savings for our customers, so that they don't have to wait while something works through a process or get handed off. It's nice when we can resolve it on the first call. The vendor management side of things, a lot of times we get on the phone with our customers when they're evaluating a solution. They like the subject matter expertise that we have, so we'll get on and represent their needs. And if the vendor, starts to go down a path that just doesn't make reasonable sense, we can help them understand that, and we can also understand the technology and help the client apply it to what their needs are, so that they can do a pretty good evaluation with what they're doing there. There's also a big push right now with vendor management from a security perspective, and there's a lot of requirements for third-party vendor risk management. And I will talk about that in a little bit here, but we help with that as well. And the backup and disaster recovery services, protecting and preserving data, as well as the security compliance services. I'm going to talk about those in a little bit more detail in just a second. I'm going to go to the cloud-based. So this is where we talk about that a little bit more. And, what's very helpful to us in guiding a lot of our success is having 2 full-blown data centers. It's really a private cloud that we have, except that we're right here in Rochester, New York, and people have greater access. Your technical team would have greater access. We can go into the data center and check and make sure things are being done, et cetera. We have, I was looking at what Jen was presenting on the outsourcing of accounting, and some of the things play here too in terms of, greater flexibility. And for example, in our data center, we have excess resources, excess servers, excess storage. And so certainly at certain times of the year, somebody may need extra data center resources. It may be a temporary thing or maybe a permanent thing. And for us, and they may just want to test a new application before they put it on their own servers. So we have a sandbox for them to test things in. And that's just a matter of, clicking a couple of buttons to move connectivity and resources around, so that we can do that on the fly to get people, access to systems very quickly. That would also come into play if there was an outage, or they lost a server, or something happened to their infrastructure. We could very easily redirect that to resources we have in our data center that are ready to go. The other thing for not-for-profits, I mentioned earlier, we have some that stick right up with technology. We have others that, it's a struggle. And we're finding that there's servers out there that are 8, 9, 10 years old, and the versions of Windows they're running are old, and they're really antiquated. And in some cases, that can become a compliance risk or a security risk. If people are in our data center, we're keeping that technology refreshed on a regular basis. And so if somebody's in the data center, they don't have to worry about their own technology getting older. They can stay fresh with what we're supplying in our data center. We believe there's a lot of efficiencies to doing that. Instead of managing, 50 different companies managing their own systems, we pull all those into one single data center, and a lot of things that we're doing only need to be done once, and they can be applied across all of those platforms. So there's a lot of savings there as well. And then again, there's an Azure cloud, and there's AWS, and there's others. You have to have a lot of trust and confidence, and certainly they've earned that. I'm not knocking them at all. Our data center, I know it's less expensive than, we've done a comparison. We do about one every year just to see where we are. Frankly, we look at that and say, should we be in an Azure cloud other than having our own? But so we analyze that once a year, and to this point, it's still quite a bit of savings for us to have our own here. We have the people, we have the equipment, et cetera. So, and it's also nice to have it right upstairs here and then within a drive if we have to make any changes. We talk about the criticality of systems and being high available, access to your data. And the goal behind that is to eliminate single points of failure. And, it's hard because you start at the big part and then you work yourself down. And we knew of a large company that spent millions of dollars on a backup and disaster recovery plan. And it came down to they were shy an outlet in their data center when they did a test. So it's really, thinking of an awful lot of things in here. But we do have duplicate files, copies of files and data in multiple locations so that we could withstand a hit in any one disk drive or file or location. We have storage platforms that are networked together across multiple data centers. We have servers virtualized. So we have close to 90 servers that we're running in our data centers. And it can be used to back each other up so that if we lose, even if we lost a data center, we would have a complete set of information in the other data center with which to keep people going. And then obviously it's important to have redundant phone and data lines back and forth, also multiple power sources, and both locations have backup generators just in case we took a power hit. I'm going to go to our senior engineers. I think I've talked about these people somewhat. They've got a lot of experience, a lot of specialized knowledge. If I skip down the senior engineers, they're available in many ways. If you have your own IT staff, we're happy to consult in certain areas. We had a customer that has a pretty sophisticated team, but it came time to explore mobile device management and they didn't have people that were knowledgeable in that area. So we got involved and we worked alongside them and provided them with a lot of research, and they ended up making a very good decision with that. So there was a consulting role there. A lot of times, people will come to us when they can't figure out a more complex issue, whether it's a network issue. We've had a lot of wireless access point issues where performance is way down. So people can call us in to look at their networks and some of the performance that they're having. We were involved a lot, as has been talked about here with COVID, with people moving their work to home. And we had to make sure that they could get access to servers and make sure performance was satisfactory, make sure licensing was in place for them to do what they needed to do. And I would say that went off very successfully for us and our clients. We participate in projects. Again, it might be something that the own internal IT staff can do. It might be something that you'd like us to collaborate on, and it may be something that you would just like to outsource to somebody else and come back and make 2 or 3 recommendations for you. So we're available to that as well. So I think I violated a rule with my font size on this page, but there was a lot here. And, when we first got in the security business, people would say, well, we're all set. We have a firewall, we have antivirus, and we use passwords. Well, that didn't fare very well for them for very long. And so what has been emerging more is the software updates. We talked about that for applications and for operating systems. There's far too many attacks that have been successful because updates weren't applied in a timely fashion. And, the violations or the vulnerabilities actually get published so people know what they are, the people that use the equipment as well as the hackers. So they're paying attention and they know when there's a hole. And so it's really important that we apply updates in a timely manner. Security awareness training for end users upon hire and then annually, that's becoming very, very important. When we talk about phishing success, it's because people are clicking on things they shouldn't. And a lot of times it's because somebody told them that they shouldn't do that. So we really are putting a lot of emphasis on the security awareness training. The firewalls are getting more intelligent. And with that, you've got to go through training. You got to understand how to manage those. And it's important that you do that. You can't just set it and forget it anymore like we could in the first generation. Stronger passwords. We've moved all our customers from 7-character passwords to 12-character passwords. They're saying the difference in time that it takes to hack a 7-character versus a 12-character. 7 is like 21 days, and 12 characters is about 15 years. So as a precaution, we've gone to that. Policies and procedures are also very important, and Bonadio can help an awful lot with that. They've done a number of those, and we've had them review ours as well. Those are very important. The contact filtering, that's a process where customers want to make sure their employees aren't going to risky sites, gambling sites or shopping sites or whatever. That's certainly up to the company, but with content filtering, we can do what you'd like us to do and not do what you don't want us to do. And then has been emphasized here, the periodic risk assessments performed by a third-party firm. We talk about we don't know what we don't know. So we know quite a bit about security, and we do a lot of things. But every once in a while, for somebody from the outside to come in and see it from a different perspective and have a different set of tools than we do shows an awful lot of things. So even for us, we get a list of things that we remediate every year. Now I'm at the 3rd generation, and these are the things that we're implementing today. It's the multi-factor authentication, which has been talked about, the mobile device management. Intune is by Microsoft, and I believe not-for-profit organizations get the first 50 licenses for free. So we have a lot of companies using that. We did have other companies that have requirements. One needed a geocaching feature, which when one of their health providers was out at a site, they needed to validate that they were at the site they said they were. So we needed a geocaching verification system so that they could comply with healthcare rules. Intrusion detection, that's where we're getting into the log monitoring and the analysis with other tools that we're using. We probably capture about 150,000 logs per day just on CIS, and we're about a 18-person firm. We've been collecting it for the last 2 months for us and our customers, and we've got over 2 billion logs that have come in. You can't handle that with just people. That's just too much, and there's a lot of irrelevant information and noise in there. So what these log monitoring tools do is we set up a bunch of criteria, and we tell them, as you look through these are the 15 things that we would like to be alerted on, and then it does that automatically for us. We can handle 15 things. We can't handle the 150 plus however many we do from our others. In addition to that, we also, the company that we work with for the log monitoring also has a security operations center. So they're the first line of defense. If something gets triggered, they get the first alert. They look at it and determine whether it's a false alert or a real alert. If it's something that they can fix, they do it without even contacting us. And if it requires a change in our systems, and they'll call us, and together we'll work on that remediation piece. And that's really a good team effort, and it's necessary to do that. So their security operations center operates 24/7, and our guys will answer the phone at 3 a.m. if we get a call from our security operations center. Now the policies and procedures, I think we have talked about that. There's a lot of people that write them, just like a disaster recovery plan. They write them and then they sit on the shelf for a period of time, and they're not kept up to date. And they really need to be reviewed and updated. Your systems are changing pretty much all the time, and it needs to reflect that. And the third party, this is what I talked about earlier in terms of, make sure they're adhering to standards. We have checklists, we have interview questions, we have other things in addition to a BAA that we ask our third parties, and just to make sure we know where they are from a security perspective on their end, because the attackers know they're going to go after the weakest link in a chain, and they'll work their way down until they find that. So we have to not only have responsibility for ourselves, but have responsibility for our third parties. And, these materials that we've drafted and created, we're more than happy to share with people. And then you could see what would be relevant between your organization and your own third parties. And then finally, we have a board of directors ourselves, and they like to see reports on what we're doing, what we're managing, what's happened, what have we prevented, what are our biggest targets. There's a dashboard of things that people would like to see reports on. We have 3 levels of dashboards, one that we share with our board members, which is, well, not to insult anybody, but it's a lot of pictures and graphs. And then we get into more detail with the technical people, that we talk to on the customer side. And then we have an internal report, which is really, a microcosm of things that we really need to be looking at and adjusting at our end. But, we've gone through and tested and make sure the reports are what people want to see. The solution we have actually has a specific HIPAA report. We actually had somebody from Bonadio help us with that because they bragged that they had a HIPAA report, and I wanted to make sure that it was valid and that it was pretty much what people wanted to look at from a HIPAA perspective. And they analyzed that with us and came back and said, this is a good report. It's a comprehensive report. And yes, that would satisfy HIPAA requirement reports. So we have that in our wheelhouse. A polling question.
Polling question 7. Does your organization have a formal succession plan for the CEO, executive director that is clearly understood by both the CEO and board leadership? Yes, no, maybe, I don't know, it's not my job.
Steve, we're trying to wrap it up here by 2 o'clock, so if you could wrap it up here relatively quickly, it would help us a lot.
Sure, Jerry. Let me just see what I have here. I'm going to go over this last slide real quick because I think it's important.
Sure.
I just skipped to like the second period or second paragraph. Just keeping track and monitoring the transactions for systems. As I mentioned, we look through hundreds of thousands of those, and that provides us good information. And in the case of CIS, we're able to escalate that to the SOC, the Security Operations Center, and that really helps us manage and monitor those. I think what I wanted to emphasize here was the last paragraph is, with the tools, they collect the data and the software learns from the data that it's collecting. They receive downloads from international sources that provides information about attacks. So when they see a pattern that's already put out there that led to a breach, they recognize that and they start looking for that in systems. So it's really more of a proactive, let's look for something rather than sitting back and waiting for something to happen. And then I had a summary, but we've been through that. So I think I could, wrap up at this point.
Steve, just one question, and I'm going to turn it over to Margaret. You have any geographic limitations to who you can serve, whether or not you're in Elmira, New York, Long Island, or the North Country? Do you see any geographic impediments or limitations in terms of your service offerings?
It depends on the level of service, Jerry. If it's something where we're supporting the IT in its entirety, we like to have somebody within about an hour so that we can get there to help them. As we get into disaster recovery services and our security services, that's all electronic, so that could be anywhere.
Okay, very good. We've got these other questions that I asked Carl that I'll ask you to weigh in on when we send out the answers to our questions. So I appreciate very much your presentation. And I'm going to turn it over to Margaret Lally. She is the firm's subject matter expert on provider relief funds. I know a lot of folks are wondering what's going on with PRF. We will finish by 2 o'clock, so don't worry about that. And Margaret, I'll turn it over to you. Thanks.
Hello. It's kind of an overview of all of the distributions to date. And the total package is about $178 billion. So as you can see on the bottom right-hand side, we've got about $25 billion that's earmarked for phase 4, which has not yet been announced or no applications yet. And then there's about $4.4 billion remaining after that. So recently they did announce a COVID-19 coverage assistance fund. So this is for coverage of vaccine administration costs for either patients who are enrolled in healthcare plans that don't cover vaccination, or if they cover them with patient cost sharing, because the vaccinations are not going to have any cost to patients. These are covered at the increased Medicare rates, and they are funded through the Provider Relief Fund. So I'm assuming that some of this is that $4.4 billion from the previous slide, but this program is definitely going to impact any future distributions from the Provider Relief Fund. So this is kind of a quick overview of the reporting, and unfortunately we see the original timeline there where the portal opens on January 15th, reporting is due a month later, you could use your funds by June 30th and then had to report on the 2021 expenses and lost revenue by July 31st of 2021. However, as many of you know, the portal did open on January 15th, but only for registration, not for reporting. And since then, we've had no updates about this. So it's a bit frustrating for providers that are really trying to get this taken care of. But unfortunately, with the change in administrations, a lot of the announcements and information have just kind of dried up. So because of this, there's a lot of advocacy going on right now. First, a lot of groups are pushing to extend the deadline to use the funds. The current deadline is rapidly approaching June 30th. So there's been requests made by groups like the American Healthcare Association and others to extend that either until June 30th of 2022, so another full year, or at the very least to the end of the public health emergency if that comes sooner. And one of the big concerns is a lot of people have started capital projects and they're not complete, or they've had delays in getting started, and they're concerned that the funding for those could be in jeopardy. There's also a big push to get the extension of the portal. So obviously there's no deadline right now for reporting, and we're rapidly approaching the second portal deadline without the first portal even having opened yet. The other big problem is, as anybody who's followed this, there's rapidly changing guidance, and providers really need a chance to incorporate all of this into their reporting. So the other big advocacy at the moment is to expeditiously release that phase 4 funding. This is the phase that was supposed to be based on your financial losses for the second half of 2020 as well as the first quarter of 2021. And as you can see here, this orange line is around about the time when the last funding, aside from phase 3, got distributed. So a lot of providers didn't really get the phase 3 funding. That was for anybody who hadn't gotten 2% of their revenue already. And there was a potential for an add-on payment, but really the majority of the funding came before that. And you can see from this graph of cases, the huge surge in cases really came after that. So, you're facing the increased cost of that surge. There's obviously supply chain disruptions and labor market shortages, and, shutdowns and slowdowns impacting your revenue. So, there's desperately, a need for a further cash infusion. And then the other big one, I think a lot of people who have dealt with the support line can feel this one. We really want some sort of contact at HHS that has the technical knowledge to answer, more difficult questions. The provider support line is there, and it's run by United Healthcare Group. So if you're having issues with your opt-in-pay account or, very simple kind of questions, they're great. But if you are a more complex provider and you have really technical questions about the FAQ where they're vague, that support line really isn't much help. So just recently on May 12th, Xavier Becerra, the new HHS secretary, did testify in front of Congress. And prior to that, 77 congressional members also released a letter to him advocating for those same things that we talked about in the previous slide. So, it's not just the associations now. We do have congresspeople on board. So hopefully we'll have some movement here soon. Got a couple quotes here from Becerra. They're looking very closely at an extension and say that they're going to be driven by facts because they do want the money to go to the people that need it the most. I think one of the criticisms of the Provider Relief Fund early on is they got money out quickly, but it didn't necessarily go, where it was needed most. So now we have another polling question.
Does your organization have a formal process for recruitment, training, and development of future board members? Yes, no, I don't know, and it's not my job. All right, Margaret, keep going.
So one thing that the American Rescue Plan did do was increase funding for oversight. So, as that reporting deadline comes up, we do know that they've added several $1 million to both the HHS OIG as well as creating a accountability committee to investigate fraud, waste, and abuse. And that seems to be a very big priority of the new administration. And if you watched the last webinar, we have had our first HHS PRF indictment. There was a provider that closed prior to the pandemic that took money. So just, a warning out there that this stuff is going to be looked over carefully. So top guidance items that are yet to be addressed, and these have been very frustrating for us here at Bonadio as well as a lot of our clients. One of the biggest ones is PPP. Does that have to be included in your lost revenue calculation? And we just don't know that at this point. And for some providers, that's going to wipe out all of their lost revenue if they do have to include PPP. So, this is a really big open item that we are looking forward to an answer on. Another one is the lost revenue time frame. Are they going to look at it in small sections, or are they going to look at it for the whole PRF period? Again, you have some providers who had big losses in certain quarters, but maybe they bounced back to the point that their revenue over the whole time frame was actually positive. So these are some action items. Make sure you register on the portal. Even though you can't report, you can register. Revisit your lost revenue calculation. There was new guidance issued, and feel free to reach out if you want some help on that, but there are a couple different ways to calculate, so you want to make sure that you're using the method that's the most beneficial for your facility. There's some ability to transfer general and targeted distributions. You want to have your reporting procedures developed and well documented. Review those audit and compliance requirements, and then this hasn't been officially announced, but we did get some information from associations that if you have issues with prior PRF distributions, most predominantly the phase 3 is still the one that's open, but potentially nursing home incentive payments as well. The deadline unofficially is to resolve those in the end of May. So make sure that if you have any open items, you want to get those taken care of quickly. So then we've talked about this before. You can use the full purchase price of inventory and capital equipment to offset the PRF. But if we go on to the next slide, this does present another double dip risk. And as we're all starting to work on cost reports and CFRs, you have to remember to consider your capital rates. So that's something people haven't necessarily thought of before. But if you are getting reimbursed for capital through your rate, you're going to want to make sure that you carve out whatever percentage of that capital item that you're going to get reimbursed for from your PRF reporting. So, Medicaid, for example, does a lot of capital reimbursement. So I would, calculate the payer mix of your facility that's Medicaid and pull out that portion of the capital when you're reporting for PRF. Quick slide on the American Rescue Plan. You can read this when we send out the slides, just another couple programs, more money for the industry. And they have actually added a new email address. This is the contact information for PRF, so the provider support line we talked about. And then that HRSA email, I actually have had some clients that have gotten really good technical information, specifically nursing home clients that were questioning how the calculation for their incentive payments was done. This email was very helpful in getting them some answers on that. So another point of contact for you. And again, if you have any questions, feel free to reach out. I think at the end of the presentation, all of our contact information will be there, and we're happy to help.
Thank you, Margaret. So, John, go to the next polling question.
All right. With $25 billion added to the current New York State budget from the Biden American Rescue Plan, do you believe New York State is in fiscal distress from a budget management perspective? Yes, no, maybe. I don't have a clue.
So we're a little bit over 2 o'clock. The slides that I had were intended to be presented to your board leadership and to your management team as it relates to reconnecting in many areas with respect to the post-pandemic return to work, if you will, or the new normal, whatever that might be. I am doing a webinar on this topic on June 10th for the New York Alliance. I will also, when we send out the slide deck, because of the time constraints, we will send out the Business Journal column that goes along with these 10 items that are described in more detail in that column. But if you go to the next couple of slides, so you got 10 items there for strategies for reconnecting. I do want to mention that DSRIP 2.0 is a tremendous opportunity for us. Once the CMS administrator gets approved, the New York State Department of Health is planning to submit a 3-year extension, could be as much as $3 to $5 billion. And as many of you know, the emphasis in DSRIP 2.0 is intended to be on community-based organizations, social determinant of health providers, etc. Go to the next slide. You already did that, right? And then these final slides are, again, what we are presenting to our clients with respect to what the boards need to hear, what we think they need to hear about not only the current state, but what we consider to be the future possible state as it relates to, excuse me, not only the, not only as it relates to the federal stimulus level, but also the New York State budget as we go forward. And I'll end with many of you have had a tough 14 to 15 months. And I think it's very important for everyone to know that we at Bonadio certainly appreciate and recognize the hard work that's been done, not only by the finance team, but the management team at your respective organizations. We've been going through a 14-month hurricane with daily tornadoes, and all of you have done remarkably well, or for the most part, with respect to the entire, what is now into its 15th month. So with that, we'll close out today. I don't believe we have any other polling questions. Is that correct?
We do. Abraham Lincoln's Gettysburg Address. How many words was it? 800, 130, 301, and 500, or over 500?
The answer is 292, by the way. So if you want to answer it quickly, feel free to do so. Again, we thank you all for participating today. We will have another webinar in June. You've got this information coming to you most likely on Monday and Tuesday with respect to the slide deck. The answers to the questions come out a little bit later. But if there are any questions in the interim that you want to address to any of us, those email addresses are where you want to go. And certainly, if we didn't get to your question in the time we had allotted today, feel free to email anybody who you would like on that list from a standpoint of getting an answer sooner rather than later. Thank you all very much. Have a great weekend. Enjoy the weather, and we will see you next month.